Q1 EPS, I see 372. I do not see a compare yet on that. But Q1 revenue, let's look at the top line, 77.67 billion. That looks like a beat. It looks like the street was closer to 75.55 billion. It looks like Q1 Azure other cloud revenue ex FX, I'm seeing plus 39%. Q1 Intelligent Cloud overall, 30.9 billion. The street was close to 30.18 billion. You would expect to see the guidance, of course, on the call from CFO Amy Hood. That's when you would get the color there. But we do see the stock initially here down about 4%.
Yeah, and I'm curious why maybe earnings coming in below those expectations. Again, we're waiting on that comp. But you mentioned the Intelligent Cloud revenue. That does include the Azure business coming in ahead of expectations. Of course, we did earlier today see a little bit of disruption when it comes to Azure, and it's a reminder of how tethered we are to the internet after that AWS outage not too long ago there. But shares are down roughly 4% at this point. And for a company like Microsoft heading into the print, the setup did look pretty positive. We've been speaking to analysts all week, and they have cited stronger enterprise tone, accelerating AI infrastructure demand from partners like OpenAI. Of course, we have that reset of that partnership with OpenAI. Microsoft holding a 27% stake in OpenAI's new for-profit public benefit corporation that's valued at roughly 135 billion. While OpenAI's nonprofit does retain that control, Microsoft does have the slight edge there in terms of the stake within this company here. So we'll continue to digest these results, parse through what could be driving shares lower, and of course the call is always important when it comes to those headlines.
Yeah, it'll be interesting there. At least initially here, it looks like Q1 Azure and other cloud services XFX plus 39%. I see that beating. The street looks like consensus 37.1%. Again, we'll wait for the call for more color from the CFO there.
And that's when they're going to provide forward-looking guidance on the earnings call too. So investors sort of wait and see mode to see what type of guidance could come in on the call. But yeah, I am curious to know what's driving shares, and we'll have to dig into this results in the report a little bit more. Shares down around 4%.
Great to see you as always. So let's talk about this Microsoft print. You know, the stock was up about 30% year to date heading into the print. We're slipping a bit here, at least initially. Importantly, of course, Rishi, we don't have guidance. We would expect that on the call from CFO Amy Hood. I am interested in your take in the print and why you think we could be slipping a bit here. I do see spending on data centers being flagged, Rishi. It looks like first quarter capital expenditures, including leases, Rishi, 34.9 billion. That was up from 24 billion in the preceding quarter. But give me your take. What's your read on the report?
Yeah, absolutely. And Josh, always a pleasure to be with you. Really appreciate you having me. Look, I think this is just a very fickle market that we're in. As you correctly pointed out, Microsoft's had a good run year to date. It's had a good multi-year run since the AI narrative has started to kind of take foot. And this is everything we could have asked for from Microsoft this quarter, obviously guidance dependent, but 39% constant currency Azure growth, very broad-based beat and kind of every single metric, and continued cost discipline where you're seeing upside on gross margins, upside on operating margins. So there's really not much for me to poke holes in this, but just given the nature of the market and valuations here, it may be a situation of just, hey, the Azure constant currency number was 39% and some investors wanted 40%, right? And, candidly at scale like this, when we're talking about these sort of raw dollar figures, 39% constant currency is an outstanding number. So if the stock is down tomorrow morning, I would probably be a buyer of it, to be completely honest.
On that Azure Cloud Computing Unit, as you noted, 39% revenue gain when adjusting for currency fluctuations. That beats what your colleagues on the street were looking for, Rishi. They were at 37%. I'm curious, what do you try to model out what growth looks like for that Azure business ahead? And what do we think the AI contribution is?
Yeah, look, the AI contribution, they stopped disclosing it, and I think they're having a little bit of trouble because, you're in a situation where everything's getting bundled together and, separating what's AI and what's not is getting harder and harder, right? And so they stopped giving that disclosure, but by my math, it's roughly, probably in the low to mid-teens as a percentage of the total Azure business, which is a really strong number, right? And bear in mind, they're using a very conservative definition of what is AI. They're not including any training of OpenAI models in there, which I do believe a a lot of their peers on the in the software and technology sector probably do. And so I think this is a situation where a lot of the growth is being led by AI, but the non-AI piece is also benefiting from what we've termed this Azure AI halo effect, where because of their leadership in AI, we're seeing them actually gain non-AI workloads, whether that's happening through the OpenAI API or some of these up the stack products like Microsoft Fabric and Synapse and Cosmos DB. That's what I think is really going on. So as we think about modeling that going forward, number one, we think AI is going to be a bigger contributor because more of the workloads for Microsoft from OpenAI are shifting from training, which was never on the P&L, into inferencing and reasoning. Add in the fact that you have this new OpenAI deal, which we think is going to be an additional contributor to numbers, and you maybe even have some esoteric factors like Sora 2, which has obviously taken off like wildfire, and I think that's going to show up in the following quarters Azure numbers. So there's a lot that I think can boost continued super healthy Azure growth here.
Very quickly, Rishi, I only have a minute left, but on that Microsoft OpenAI relationship, we got the new details there. Microsoft's going to own about 27%, worth around $135 billion. Any more questions you have about that, Rishi, perhaps that could be brought up on the call? More insight you'd liked about that?
Yeah, look, I think it was a great deal for Microsoft and a great deal for OpenAI. I think both companies need each other. The one question I want to maybe better understand is there's a clause in there around Microsoft having rights to AGI, even post AGI, until 2032, and research rights until 2030 or AGI, whichever comes first. And what we don't know is who is on this council that's deciding what is AGI and what's not? What is the demarcating line? I think that's something that we'd all like to know a little bit more about, because obviously Microsoft, I think, does need OpenAI, and it would be great to see them still have all these rights, maybe even after post AGI. For now, I think that's something we just don't have a little bit too much clarity on, and I'm hopeful we'll get a little bit more today.
Rishi, always a pleasure to have you. Thank you, my friend.
Thank you.